Your market news now. Asian stocks tracked Wall Street higher ahead of a chorus of Federal Reserve officials due to speak later in the day. No fewer than 6 Fed speakers are on the docket, and they could provide further clues on the U.S. interest rate outlook following last week's policy decision. In currencies, the dollar edged higher ahead of data on U.S. retail sales due later in the day. The rand was slightly stronger, building on gains after Unity government members were confirmed last week. In company news, thermal coal exporter Tungela Resources expects its half-year profit to fall by as much as 69% due to lower prices amid persistent freight rail problems. The decrease in earnings was mainly due to a decrease in coal prices amid lower than expected winter energy demand from Europe and Asia. The JSE is mainly higher at midday, with the all-share index gaining about 2.5% at just over 79,000 points. Industrial index up 1.6%. Financials also surging higher, up about 6%. The rand trading at 18.13 to the dollar, 22.98 to the pound, and 19.46 to the euro. On the commodity side, gold is trading at $2,307 and platinum $970 per ounce, while a barrel of Brent crude will cost you $84.95 a barrel. To give us perspective on the markets, we are joined by Makwe Masilela from Makwe Fund Managers. Makwe, thank you so much for your time. It's quite interesting when you look at the performance of the rand, you look at our local markets. Have you ever seen this kind of buying before? I mean, this is probably the first time in a long time that I've seen so much green.
Definitely agree with you, but you know what, it's more also of an international theme, because you see people who, you don't get someone who's a real seller this time around, and because people think that the momentum will continue. And as the momentum continues, then stocks will continue to win. So back home here, we're also getting a boost from the fact that markets are getting a better full reaction to the developments that we've been seeing locally since Friday. Remember, yesterday it was a holiday and other markets were open, they were up. So I think it's now that we are fully reacting to the developments that we see on the political front, but markets will continue to keep a keen interest or an eye on the developments when it comes to the cabinet formulation. Remember, markets are anticipating that the cabinet that will be coming, it will be more that will be driving economic reforms. So markets are acting in anticipation.
So you're basically saying that this thing that we're seeing where SA Inc. stocks are on fire, a lot of that momentum and sustainability will hinge on what that cabinet composition looks like and the policies that come forward.
Yes, but remember, it's also getting a boost from the fact that momentum internationally continues to be positive. And maybe just to put it in context, you know, markets, this is hot money. Now they're happy with us. Then at the click of a button, they're buying our stocks. But say for whatever reason, that does not mean that they've signed a contract that will be here with us forever. If another region gets to be more attractive, the guys won't hesitate to dump us and go to that particular reason, because they're just looking for an opportunity to make good returns. My point here is this is just hot money. It can just come in as much as it can go out anytime. But so far, I guess let's celebrate the good news.
All right, speaking of good news, let's talk about Telkom results, because that share price was up. Markets seem to like what they've put forward. What were the highlights for you when you look at those numbers?
I think the strategy is paying off, you know, of being data-driven, and we have seen that shareholders approved that deal to sell SwiftNet almost for just over 6 billion. But as it stands now, looking to their mobile subscribers, they just passed the 20 million, and also their revenue was just up 1.6%, but that was driven mainly by mobile data, and also the issue when it comes to the new generation of connectivity. And OpenServe so far is passing around 1.2 million homes, and they've got the highest connectivity rate in the market, sitting at almost 48.5%. And I think the fact that they're mentioning that there's a likelihood that they can start resuming paying dividends, that's also exciting for the markets. So markets now saying profits as headline earnings per share going up by 203%. I think the guys have just turned the corner.
Let's talk about Fed speak for a bit. I mean, last week we had US CPI data as well as that FOMC meeting. What was more constructive for you? Was it the CPI data? Was it the Fed decision? Or was it Powell's conference with the journalists?
I think in that order. because firstly we had just hours before the announcement of the interest rate, the Fed decision, we saw the inflation numbers, and that started giving us a little bit of hope. And yes, it was confirmed in their statements, the Fed stating that yes, as much as we might not be thinking of 3 rate cuts as we used to, probably this year we should be getting one, but next year we expect to almost get a more or around 0.5% cut when it comes to interest rates. So it has just been a build-up to all those events. But for me, it started with data, as they always mention that whatever decision they'll be making will continue to be data dependent. Hence, we always keep a close look or at least a watch when it comes to whatever data that gets to be released.
When it comes to those interest rate cuts, let's talk the Fed and the South African Reserve Bank. How many cuts are you expecting? Are you sitting on one with the Fed and perhaps one with the SAB? And then at which month in particular, if you wanted to narrow it down?
Starting with the Fed itself, if data will be continuing to guide them, then definitely September rate cut is possible. With us, then it will probably be one cut come December, because I think the third quarter data will determine what happens to the interest rate decision. And I think our last interest rate decision should be somewhere around November or so, but it will continue to be driven by what the US does in September and also the data that we'll be getting for the Q3, because we always want to maintain that interest rate differential between ourselves and the US dollar.
Right, Makwe, let's leave it there. Thank you so much for your time. That is Makwe Masilela from Makwe Fund Managers, giving us his perspective on the market dynamics. We're going to take a quick break. When we come back, we'll have more news. Stay tuned.